All right, hey everyone. Hold on, let me adjust my microphone here. Hey, thanks for joining me. Mark here. Thanks for joining me for another Greenbridge Investing Market Analysis. Just let me know if my sound is not okay, just let me know. All right, cool. So again, thanks for joining me for my live stream. So in today's session, again, we're gonna update what we talked about on Monday. Of course, Bitcoin, what's going on with the stock market, and we'll take a look at the gold, dollar, maybe some Forex pairs if people wanna see them. And the idea here is to get a sense of perspective and what clues the market is offering and what has changed since Monday, so we can get a sense of what's realistic over the next few days in terms of reward risk. Okay, so with that being said, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Also, if you're new to the stream, just make sure if you have a question, please share it in the chat now. Also, if you'd like to put what city you're from or what country you're from, that's always fun to see. And also one symbol per question so that everyone has a chance to ask a question and I have more of a chance to answer them all. Now, I'm not simulcasting today, so usually I have a better time at answering more questions. Okay, so let's begin here with Bitcoin. Now, what was I talking about on Monday and Tuesday? The situation here when we were fooling around these lows right here, okay? Even people in this chat, there were some comments in here saying things like, oh, Bitcoin is going to get hammered. Oh, Bitcoin bearish, blah, 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 right? And out of nowhere, the green candle. So, and my point in my TradingView article, my point has been we cannot see what goes on inside of this candle low. We can't see. All right, as much as we'd like to fool ourselves and think we know what's going on, we cannot see. There could have been large buyers or whatever, something going on here, and next thing you know, green candle in everyone's face. So how do you position yourself for something like this? First of all, it's the probability of the location, something you cannot see. So I have had this line, I drew this line on my chart on Sunday actually, and that's the 28.5 low. And my point was, if it can't take that out, and we see some sort of reversal, which is what this engulfing candle is, then we're likely to go higher. If it can take it out decisively, meaning we close below, you know, you're seeing 28 even, 27.5, whatever, then we're looking at 26. You have to let the market make the choice. You don't make the choice yourself, okay? The only thing you can control is your risk and where you want to take a loss. That's pretty much the things that we can control with absolute control. As far as profits go, I mean, profits are really up to the market paying you and how much you're willing to risk to make more. I mean, that's the profit game, all right? So the point is this, support held, we have the engulfing candle, and now we're looking at higher prices for now. Now, how much higher though? That's the other thing, because whenever you see something dramatic like this and it catches all the herd mentality people and all the other experts off guard because they're watching their 5-minute charts, when they see something like that right away, everyone gets excited, everyone gets emotional, and they start calling for, oh, Bitcoin's going to 40K right now, Bitcoin's going to 50K now, blah, 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 right? All that. I'm sure you've heard it before. And what's realistic though? That's the question. What's realistic is 35 to 38K. That's realistic because that's the middle of the consolidation. There's a high probability that we test that area. So that's a great place if you happen to buy some or in some. We've had some swing trades. I don't think they stopped out. Those are good places to get out of something or take some profits or whatever. If you have them, that's a great spot to do it, the middle of the range. Now, the resistance area is 36 to 38K, which is basically these highs right in here, this area right here. Okay, that's what you're looking at as resistance, which means price needs to clear that in order to do something relevant, in order to do something really significant. Otherwise, it's still in a consolidation at this point. Yes, we have like a double or triple bottom, whatever you want to call that, and that is bullish, especially in light of the bigger picture, which is still bullish. So that's why people that were shorting into these lows, I told them, you better be careful here. The risk is very high on the short side. I mean, this thing can easily run to 40K. or 41K, which is really the range resistance up in here. Nothing has really changed. The only thing that we have new here, the only new piece of information is the bullish engulfing candle and double bottom. All right, that's really the only new piece of information, which is bullish. Now, if we can't take out 38K, then we're still stuck in the range. So even though we have this reversal, it's good to see, and it's definitely worth betting on the long side. Okay, at this point, your risk is higher if you're in from if you're not in this thing and you're interested in it. You're looking at, what is this low here? 29.5, but 28.5 is really the spot that needs to be cleared. So that's the best place to put a stop for a swing trade. If you put it any tighter, your chances of getting stopped out are high because this thing is very noisy in this consolidation. Also, just because we have a double bottom here doesn't guarantee that this thing is going to, okay, back in buy mode, here comes 80K, right? There's no guarantee. So we need to clear those resistances to provide evidence. And the trade portion of this is, hey, you take a chance in a situation like this, it starts to get to some resistance levels, you lock in some profits, hopefully for greater than 1-to-1 reward risk, because if you're not doing, you should be doing greater than 1-to-1, or at minimum 1-to-1. If you're doing less than that, you're wasting your time. So 1-to-1, 1.5-to-1, 2-to-1, whatever you can get, that's where you should be taking profits. People right away, they always ask me, where should I get out? Where should I get out? Right? Because they're always trying to maximize the top. Forget the top. Forget about that whole part about, you think you're going to make all this money and blah, blah, blah. That's the wrong focus. Really what you should be thinking is, well, how much did I risk? And how much more have I made relative to that risk? So if you're at 2-to-1 and you're taking some money off the table there because you're happy with that, that's a great trade. If you're more than 2-to-1, if you're 3-to-1, or anything more than 3-to-1 is a home run, in my opinion. Now, some people would not agree with that. If the thing runs 10-to-1, oh, you took it at 3-to-1, you suck. Hey, I made 3 times what I risked. That should be your only objective, is to make more than you risk. Otherwise, you're just gambling. Okay, so anyway, that's the Bitcoin situation. Now, we had that Ethereum trade that that Andrew sent out that night. It was basically, right off of that low. And that Ethereum trade is doing well. Let's take a look at it real quick. Right? I mean, it's pretty much following as you would expect. And it's coming off of that little mini pin bar low. Nice double bottom. And that was a nice call for a swing trade. So if you're not in this, you shouldn't chase these things. There'll be more opportunities. That's the other thing you have to realize. People right away, oh, I'm missing out. Oh, now's the time to buy. No, it's not. If you didn't get the best price, they can, this thing can fake out again. This thing is not exactly the momentum right now is not exactly bullish on the bigger picture. It's range bound. So you may get that little higher low pullback. Usually it's better to wait, okay? There'll be more opportunities. You're not going to get them all. So just something to keep in mind there. And don't feel bad. There's no room for feeling good or bad. You shouldn't be you shouldn't be judging yourself as a result of the outcome. I have a negative trade, I'm a bad person. You shouldn't do that. It's not relevant. So what you do is, hey, you missed it, no problem. You wait for the next one. I mean, there will be a next one. That much we know. All right, so that's what's going on there with those. Let's jump over to the stock market real quick. Again, let me know if you have any questions. So this stock market, again, is acting, it's in ridiculous mode, right? I put that in the chat yesterday. This thing, I mean, it had that bottom, a week ago, right? We sent out, it was the week before, we sent out that short trade on the NASDAQ. And right at the bottom here, people are asking me, is now a good time to still get in? And I said, no, it's not, because this is what the risk you're facing, okay? Look at this thing. This thing is at 14,926. We were short from 850. It reached 2 targets, right? And this thing actually, the short from 850, I think there's a 150-point stop on this thing. So 1/3 of that trade is still open, and it is now red, that part of the trade. So, but we locked in 2 portions that were green. That's how you reduce the risk of being stuck in something like this, right? So even if this stops out, the trade would actually still be slightly green because we locked in 2/3 of it on these lows. That's where our targets were, right? One target was at 650. The other one, I think, was at 5 even or something like that. And this thing went to, what was it? low is 453. So again, this illustrates why it's so important to have targets in advance and not let greed step in and think you're going to have the home run of home runs. You have to take some money while you're greater than your reward risk. Okay, so that second target was basically, I think, what, 1.5 times or something like that. I forget the exact ratio, but anyway. So that's what protects us in a situation like this and allows us to sit through something like this. This is ridiculous because it seems to be very artificial. But all right, forget my opinions, they don't matter. What matters is the location, okay? So here we are, basically now in double top area. We have a higher low off of this 450 whatever, 453, 14,453, and theoretically we should get the higher high. All right, so theoretically, this thing should take out 15K over the next day, or maybe next week or something. Now, but there's no guarantee it will. So the question is, do we get a double top? Do we get a failed high up here? It's possible. It doesn't look that way at the moment. And some people, aggressive traders, may consider shorting something like this, but there's no reason, there's no candle reason to sell this. You're selling into a resistance area, yes, a previous resistance. But when we got short, when we took that short a week ago or whatever it was, that was based on this tweezer top back here. There's no tweezer top right now. There's no pin bar. There's nothing. Just a strong candle. Okay, so it's usually not a good idea to get in the way. What I told people back then was wait for the retrace and see if this thing could fail either at a lower high, which it has not done, okay, or the possible double top or failed high. Those are the only scenarios left for the short side. Otherwise, this thing just keeps going. I mean, that's just the way it is. So not a good idea to get in the way. Remember, this market is not a bear market. It's a bull market still. Look at the S&P. High or low, this one is not as dramatic as the NASDAQ, right? It doesn't look as what's the word I'm looking for? I guess strong. You may have the lower high develop here. Today's candle isn't very enthusiastic. So we have to see. Again, can't really make judgments on the candle. I have to pay attention to the location. So the location is a vulnerable spot for longs. I wouldn't want to be long here. And that is a sign or a gauge for stocks. I don't want to be long stocks. I've been staying away from stocks this entire time. I've been staying away from stocks this entire time because I don't like this price action. We had one attempt at selling off, which got everyone all riled up. And now we come back, which again makes everyone feel complacent again. And I'm not buying stocks in this. You got to be nuts. Maybe it breaks a little higher, but the risk of retrace is still very high. We saw in just a couple of days how far this thing sold off, just to recover it. Okay, fine. But I don't like that. I don't like that type of price action. So I'm not interested in swing trades for stocks. And there will be periods where, it's better off to just step aside and stay out. You don't always have to be in the market. It's not like we're going to run out of opportunities here. If you don't like the environment, you don't have to do anything. You make the rules for your money, okay? You make the rules. And for me, I just don't like this. I could be wrong. And sure, maybe it goes higher. But I'd rather step aside and wait for a better opportunity. Was this a buying opportunity on this low? Yeah, you can say it was, but it was a tough one because a lot of stocks aren't doing that great. This is a reflection of just the leaders, okay? Like, Amazon, right? Amazon, look at Amazon. Possible lower high there, right? Google, higher high, okay. Facebook, possible lower high. NVDA, how's this one doing? Let's see. I mean, look at these things. So that's a reflection. That's the NASDAQ right there. So that's why, I'm not very enthusiastic. Let's take a look at the bond market real quick before I get to gold. Here's the bond market, right? This is the 10-year note. And I bring up the bond market a lot because it's worth keeping an eye on. These are the futures. And as you could see yesterday and the day before, we had the pin bar the other day. Yesterday we had some bearish follow through. Now these aren't big moves in the bonds. This is really nothing to be dramatic about. All right, inside bar today. But what I'm looking at this for is a sense of, is the broader trend still intact or like what can I expect over the next few weeks? That's what I'm watching for, to see if there are any significant changes. I mean, at this point, you can argue that the more recent structure is bullish, but the broader structure is mixed because, you know, we have these highs up here, had this more dramatic pullback, tried for the lower high back here, that got broken. So we have a potential bullish structure here, which implies lower interest rates, right? That's until the support is taken out. So, you know, this market is mixed. This could be just this whole section right here. Let me just point out this section. This entire section, right? If I zoom out a bit, that section may be a lower high developing, but it's still too early to tell. If that's a lower high, then, and this thing starts going for lows again, then we're looking at higher rates, right? And who can stimulate something like that? The Fed. The Fed could start saying something about rate hikes. They could start saying whatever they start saying, whether they do something or not, right? That's where it's going to come from. Or any type of government action, any type of government talk, or whatever has to do with interest rates or stimulus nonsense or whatever else they're doing can affect this. And this will turn the whole market one way or the other. So that's why it's worth keeping an eye on. Now, with that being said, let's take a look at gold, because this is where logic can get in the way. Here, let me pull gold up here, XAU, USD. Logic can get in the way. And, you know, you may, with logic, from logic comes an opinion, right? You say, well, you know, A plus B equals C. Okay, so if that's the case, I'm going to do this because that's the way it should be. That's the way economics work, blah, blah, blah. Right, but markets don't really follow that. Markets are emotional, so they're irrational. And if you get stuck on an opinion saying, well, if there's inflation, you know, gold should go higher and blah, blah, blah. Okay, right, and theoretically gold should go higher. And it looks like gold is giving us another bullish pin bar today. So this is a higher low. It's a possible buy signal developing on gold. What's the high on this thing? 1808. So a break of that high. So if you see like 1810, 1815, you may get another leg higher. But again, gold has been very tricky and it can change fast. More importantly, what's the risk on gold? 1792. You're looking at about 20 to 25 points of risk on something like gold, which means you need to make that at minimum to justify such a trade. It's not a horrible idea. You could make that. It's possible if this thing runs back into the mid-18s, possibly high 18s in the next leg. And we are still in a seasonal bullish time for gold, so you still have all those arguments. So gold is definitely worth keeping an eye on for a swing trade long, which implies weaker dollar, right? Now, let's just take a look at, this is again where you don't want to get mixed up with opinions and stuff. Here's the dollar. This dollar is not exactly doing something weak. So the bonds were sort of implying, well, lower rates, right? Or at the moment, unless they start getting bearish again, the prices get bearish, then we'll see higher rates. The dollar doesn't seem to want to pull back. We have a bullish pin bar today. Same look as gold. Gold and the dollar usually don't move together. So it's either one or the other, right? That's logic. So we have to see, the market has to decide. In these situations, don't argue with the market. Don't sit there and think that your logic carries more weight than the market, because the market decides. So don't argue with it, right? If the dollar is conflicting with gold, then hold off on gold. Because which is heavier? The dollar, right? Because if there's a dramatic move in the dollar, gold often reacts to the dollar. The dollar doesn't react to gold, right? So something to keep in mind there. And so keep an eye on that. Bonds can have an effect on this as well. Bullish pin bar looks like it wants to go higher. So higher dollar, that sort of negates that bullish pin bar on gold, right? So that's the point that I want to make with these things. Make these comparisons. When it comes to something like gold or Forex, I mean, look at Forex, right? Look at the euro real quick. The euro was looking strong yesterday, or whatever, earlier, and it turns into a bearish pin bar, like out of nowhere. So perhaps there was some news. I think they had their rate announcement maybe earlier today or something. I don't remember exactly. But these things change fast, right? So that's why keep an eye on the levels. Don't get too caught up on the candles when it comes to these type of markets, because there's a lot of conflict right now. Keep an eye on the levels. Keep an eye on the trend. If you take a chance, if you make a bet, like for example, you say, oh, euro, high or low, looking for long, and you go long and it breaks support, you get out, you take the loss. That's the only way you can protect yourself from these mixed markets or these conflicted markets. And like I said, if you're unsure, don't trade. You don't have to trade. You make the rules for your money. So, all right, so that's the things I wanted to cover real quick on my side. Let me get to your questions now. Again, I appreciate all of your questions. And let's see what we got here. So, hey, Wedge, good to see you. Andre from Renton. Hey, Andre. Renton, where is that? Oh, Washington. Cool. Okay. And all right, so Bart from Uruguay. Hey, Uruguay. All right. Mucho gusto. Hey, I didn't realize he speaks Spanish in Uruguay. Hey, Schwartz from Romania. Good to see you. All right, cool. Oh, good. You took the ETH trade. Very nice, Schwartz. That should be working out for you. So let me just go back to BTC here. Yeah. Okay, cool. And thanks for joining again. I noticed we have more and more Romanian people coming here. Maybe it's Schwartz has something to do with that. Hey, Kavi, can you have a look at oil? Good question. USD WTI. Now, oil. This is interesting because oil is obviously, energy is a big component. It's a heavy component in the S&P. So the S&P pulled back, what, a week earlier? Oil pulled back a week earlier too. What a coincidence. Look, we have a rally in oil and we have a rally in the NASDAQ and the S&P. What a coincidence, right? So oil's a big factor here. And this is what a bounce on oil. Now, here's the thing. First thing I want to know, we know the trend is generally bullish. That's clear. Higher lows and higher highs. Things are getting a little confusing here, though. We have a lower high over here, and we have a support that was broken here. All right, this level here, what is that? $70, basically 70.5 area, that area right there. That support was broken. So now we have some changes taking place here. People are all going to be focused on the rally. Oh, oil is going back to $100 a barrel, blah, 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 you're going to hear, right? Oh, great. Well, you're at a resistance right now in oil, right here. This is a resistance. Now, price isn't reacting to it yet. So far, price looks like it wants to just clean right through it. That's why you can't step in front of these. But there is a level to be concerned about here, or to watch if you're interested in a short, because if this thing reverses, if we get a pin bar, maybe tomorrow or whatever, tonight, you get a pin bar reversal in this area, like in that right there, it turns into like a bearish pin bar, that would be a sell signal on oil. And I wouldn't be surprised if the NASDAQ and the S&P, or at least the S&P, gave a similar look. So that's what you have to watch for, the lower high. Because you can argue and say, okay, but aren't we in a bullish trend, and isn't this a higher low? It is a higher low in the broader bullish trend, it is. But we are competing with this structure here right now. So which one carries more weight? Well, the broader trend should carry more weight, okay, and we're seeing an effect from that. But if this thing can't make that new high, if it fails somewhere between here and the high, then that is a new piece of information. So for oil, I would be open to aggressive shorts. I mean, obviously, I'm not in the long, missed that long. I wasn't looking at oil, but that would have been a nice try, just, after the fact here. So at this point, I would be open to the short on oil, but there's just no reason, besides the location, there's no candle reason to get into this thing short, right? Now, and just thinking back to the dollar looked like it was maintaining its strength. We can't have a strong oil and a strong dollar at the same time. I mean, when it comes to that, like if we see something like that, that's way off. Eventually, one has to win out over the other. And like I said, it's usually the dollar that carries more weight. So just something to keep an eye on there. So I like the location for a short. It's aggressive because it's counter trend. But if it turns out, if you see the setup, the reward risk makes more sense at these levels. Okay, if I was going to go long oil, I wouldn't be interested in the long here because we missed the move. If I was interested in the long, I'd be interested here, somewhere for a potential double bottom. What is that, 65.07, 65 even? That's where, if I was going to go for a long, that's where I'd be interested, not where it is now. All right, so thanks for asking about oil. It's a good question. All right, let's see what else we got here. Hey, X, can you, Dan from Romania, see, my Romanians. Could you recommend to jump in? So, like I was saying before, no. Well, actually, let's evaluate that question in more detail. So, the question is, should you jump into Bitcoin now? The real question is, how much risk do you have to take? right? So if you buy this right now, what's the price? 32.3, right? So if you buy this thing basically at 32.3, your stop, there are two places. There's the low of the candle, which is 29.5, which is likely to get stopped out because it's just the candle low. I mean, especially with the range of some of these candles, it can go there pretty quickly. Or you're looking at 28.5, but you can't put the stop exactly at 28.5 because the whole world puts their stop at 28.5. It means you got to put it a little lower, like maybe 28 even, something like that. So if you buy this now, are you willing to take 4,000 points of risk? And if that's the case, maybe you are. You know, it's really just a function of size. You could just take a smaller position, and if it goes 4,000 points against you, it shouldn't really be more than 1 or 2% of your account, right? So if you take that risk, the next question is, what are the chances that this thing can run 4,000 points at minimum, because that's what you need it to do to justify your risk? Well, let's see, what's this high over here? 36.5 around here. So this is 36.5, right? That's 36.5, which is, what is that? 4,000. It's about 4,000 points. So I would say, you know, if you're willing to take that chance, you can. Your chances of reaching 1-to-1 are still within reason, because that midpoint of the range is reasonable to reach over the next few days. But you're looking at 4,500 points of risk. If you had taken the trade earlier, just to compare, if you had taken the trade on this break here, like the Ethereum trade, the high of this candle, 31.06, right? You're taking, well, I mean, it's not a huge difference. You're looking at maybe 3,000 points, but that's, for Bitcoin, that's pretty good. 3,000, 3,500, and all you have to do is make 3,000 to justify it, which is it's under this, it's below this resistance here, right? At that point, you know, you'd be getting out at 34, 35, whatever, to at least, you know, take some profit off the table. So that's what you need to consider to answer that question. Also, I mean, you have the engulfing candle going your way. Keep something in mind too. A lot of times when you get these candles, this thing is not in a strong momentum movement right now. I mean, what's a strong momentum movement? All right, let's go back. Let's go back to the party days, right? Let's go back. This was strong momentum. So whenever you got a push, you got a buy signal off of a low, I mean, this thing would just run like a train, right? It would just run. We had some nice swing trades in that. We didn't catch them all, but we had some nice swing trades. Even up here when it was nearing the top, right? We had those nice, it would run. Now, it's no longer in party mode, right? So these buy signals don't go very far. And so that's why it's not within reason to expect this one to go very far until the structure changes, right? And that change would come into play upon a break of 36K, upon a break of 41K. You see something like that, then we're getting back into that bullish momentum mode. Although the bigger picture is still bullish, it doesn't mean that the momentum is going to be the same. So right now that momentum is a little off. So in a situation like this, the reason why I bring up the momentum is because in a situation like this, one thing you may want to consider is putting a limit order below the market and try to get a better price. A lot of times, you know, the candle may test the midpoint of that engulfing candle and you may get tapped in. The drawback to something like that is if the momentum doesn't come back your way and it taps you in, the bearish momentum may take you right to the stop. That happens a lot when we use those limit orders. That's why we don't use them very frequently, trying to fish for a buy like below the market, because you're going against that initial momentum. But it's one thing to consider if you want to try to get a better price. Okay, so those are the two scenarios you might want to think about if you're not in this thing. So it's not a horrible idea, just understand the risk, okay? And thanks for asking that question. Another thing you may see is a higher low somewhere along the way, which would be even better. Okay, Bart, can you take a look at CHR? Sure. CHR, is that a stock or is that a coin? Let's say, I'm guessing it's a stock. So if that's the case here, I mean, general trend, I see higher lows and higher highs in general. So we can argue that the trend is generally bullish, okay? Shorter time frame, or more recently, you have a consolidation. So a consolidation within a broader bullish trend, which can be a continuation pattern. Okay, So still bullish so far. Recent price action, you have a pin bar from the other day, bullish pin bar. Okay, nice. And now you've had some follow through from that. Okay, that's all nice. Now, buying this now is a bad idea because you're buying into this little resistance area right here. Although this thing is generally strong and theoretically should go higher, you might be able to get a better price from this. So the question is, are you, oh, okay, thanks for clarifying. All right, so CHR USDT. Okay, here we go. That was an interesting chart anyway. All right, so let's jump over to CHR USDT. Yeah, if you're asking for a coin, just put USD after it. Otherwise, I'll analyze the wrong chart for 3 hours. So here's CHR. Now, all right, this is interesting. It's doing its own thing relative to Bitcoin. Usually these altcoins, like I always say, most of them follow Bitcoin. And Bitcoin's trying to pop. Now, this thing has been a little early, right? This thing started to go a few days ago. Maybe, what, 10 days ago? Or something. We had a couple of coins do something like that. Like there was AXS or whatever it was called. There was a few of these. Now, here's the thing. So the first thing you want to see is support and resistance levels. The general trend we can argue is bullish because you had the consolidation. You had the run up, right? You had the hype run up from February, March, whatever that was. You had the consolidation pullback and you found the higher low. The higher low is established at 14 cents. Right, you have the double bottom there, and it's been trying to work its way off of that. But now look where you are. See, this could be very misleading and seductive because you're like, oh yeah, it's strengthening now. Now's a good time to get in, right? But where were you? Why weren't you interested over here? Or why didn't you have the courage to take the risk over here? You want to wait till it looks better. Okay, that's fine. But the question is, while the structure is improving, where are you relative to support and resistance? Well, you got this. You're basically back in the middle of this consolidation back here. This whole midpoint back here, this is going to act as most likely as a resistance, number one. This whole section right there. You're buying right into that. Not only that, but price has shown us some evidence by the pin bar right there. So that's the first thing you have to consider. So risk is high, buying this thing right now. You're better off waiting for an old resistance or what would be a new support, which would be around 21 cents. That's the first thing you need to consider. The second thing you need to consider is, Bitcoin. So usually when, Bitcoin is the leader. So now Bitcoin's trying to go and you make, okay, yeah, this thing it's acting relatively strong. So it should go too. But like I said, you're going into a resistance. What if Bitcoin fakes out and puts pressure on this thing, right? So that's the also risk you're taking. Don't lose sight of Bitcoin. Although occasionally these things start to do their own thing, I wouldn't bet on this thing doing its own thing, for whatever, like just on a regular basis. I would not bet on something like that because these altcoins, most of them don't. You have your exceptions here and there, but betting on an exception is like a lottery ticket. So if you want to play that game and gamble, okay, but I would not, there's no consistency to it. So I'd watch for this 21 cent area to see if you could get a buy signal off of that, if anything, to do something like this. And again, this would be for a swing trade. I don't like these things for position trades at all because I think most of them are junk and most of them are just hyped and they're just, they're not investment grade assets like you find in the stock market. They're more like penny stocks. Okay, so thank you for asking about that one, CHR. Okay, Bart, after watching your stream several times, I get a great idea of when not to enter the market. What is not clear to me is when to enter. Would you expand on when to enter? Okay, well, yeah, let's bring up an example. So let's take a look at Ethereum because that was a recent swing trade that was sent out, right? So here's Ethereum. And so when to enter. Now, this trade was sent out when it looked like this, okay? There was no bullish, there was no engulfing candle, there was nothing there. It looked like this when that was sent out on Monday or whenever it was. Now, what do you see here? Well, potential double bottom, right? And there's a pin bar close. So the high of the pin bar, the break of the high, that was when to enter. Now, why? Well, the pin bar is a reversal pattern. You have a support level that's been proven a number of times, and you have a broader price pattern, right? Potential double bottom, you can argue, or high or low, whatever it's almost the same idea. You don't know that this is coming, all right? We're taking a chance. We're taking a risk that buyers will step in because they've stepped in before. That's when you enter. So, and again, you let the market do the work for you. we use a buy stop to get into that. We don't sit there and react to it. We don't say, okay, I feel good now, I'm going to buy it. That's reacting to stuff like that is usually a bad idea. So the buy stop, the market goes to the stop, it taps you in, and that's that. Doesn't always work out. We've had many times where you get tapped in and it goes right to the stop. I mean, that's part of it, but it's better than reacting. So that's when to get in. Basically, you're looking for a level, you're looking for a pattern, and you're looking for some kind of reversal at that level. It's confirmation. All right, so in a nutshell. So thanks for asking about that. Okay, got that. Hey, Julio from London. IBEX35. All right, IBEX35. Let's take a look. So this is an index, and this, you know what this looks like? This kind of looks like the Russell 2000 a little bit, but it's 35. I'm guessing this is similar to the Dow. Anyway, it doesn't matter. What matters is the price structure. So this thing was in a nice bullish trend. Recently, it's sort of changed, right? Some people would argue that this is a bearish trend. The momentum is bearish, but this is not exactly a bearish trend because you still have to consider all of this, right? None of that is bearish. So now you're pulling back and testing supports. And what a squeeze off that support, right? What a push. So you can't chase these things. You cannot chase. If you're interested in a long on something like this, I would look for the higher low or the double bottom and then see if you get the reversal there, right? That would be somewhere in this area right around here. See if you get that. Again, and I'm speaking from the swing trade perspective. That's around 82.65 is the low. So in that area. Now, you may want to consider, you may be thinking the short side because you may be thinking, okay, well, look, I'm expecting more of this price action to continue. Okay, for a swing trade, it's not a bad idea. You have the bearish pin bar. Just keep in mind, you're going against the bigger picture. So how do you adjust to something like that? For one, you should have smaller expectations. A stop on something like that would go just above the high, 86.83. Probably just a little bit more than that, because if this thing is going to reverse and this is going to be the lower high, then it really shouldn't be going above that pin bar, or if anything, should not be going 87.12, definitely should not be going here. If it's going to be a short, has no business going here and taking out that high. So you can consider that. But now the other part of that is, well, where do you get out if you take that short? Well, again, look at the reward risk. If you can get 2 to 1 or 1.5 to 1 on something like this, you take it. Because this thing can find a double bottom, right, and reverse. That's what you have to keep in mind. No, all opinions aside, you can't have opinions with these things. Same with the Nasdaq, right? This is kind of like, well, this is a lot weaker looking than that. Here's the Nasdaq, and the IBEX looks a lot weaker, relatively speaking. So the IBEX would make sense to give a short a try, based on the pin bar. Where the Nasdaq, there's nothing there. Potential double top in a bullish trend. Right, which is not exactly the best situation for a short. So the IBEX, it's a good contrast. This is really a much better situation to give a short a try. If you're interested in a long, again, you wouldn't want to do it here. You'd want to wait for those lows and see if the lows can hold. All right, so good question about that. Okay, let's see. SPCE, sure, let's take a look. Or you're streaming, I appreciate, okay, cool, no problem, Bart. And thanks for spending the time with me. All right, SPCE. I see a lot of streams out there. I see a lot of videos out there on YouTube. There's some good ones here and there. There's someone that at least provides some interesting ideas or whatever. But man, there's so much garbage out there, and they get a lot of views too. And I just like, wow, I don't know. I must be doing something wrong. But anyway, okay, I'm glad some people appreciate what I do. So here, okay, so this one, you have to keep something in mind with SPCE. This is a very news-driven stock. It's not going to follow the S&P very well, right? It's not going to be highly correlated. I mean, look where the S&P and NASDAQ have been over these couple of days. This is a tech stock. It should be making new highs, but it's not. It's putting in a potential lower high. You have a potential head and shoulders formation right here, right? If it takes out this low, now this is the market's. The market is. What's the story with this thing? The price is much lower here, but I don't see a candle there. Is this thing broken or something? I don't know what's going on there, but I don't know if that's the right price. Maybe it's not. But the market's still open, so this thing shouldn't be there. Anyway, the thing is, if it takes out this price of 26.65, maybe it's halted or something. I don't know. Anyway, if it oh yeah, there's like a red thing on here, so maybe it's halted. It shouldn't be here. And this is not so in this situation, if there's like some kind of drama going on, because you're going to get a lot of drama with these things, don't step in front of these things, okay? If this lower high stays intact right here, which is what, 33.90 lower high, and you took out that support, then you're looking at a confirmation of bearish momentum. I'm not going to call it a bearish trend because trend sort of implies a much bigger picture. And on the bigger picture here, there's really no trend. It's just sort of, you have a high range high over here, and you're in the middle of the range right now, and you're looking at a potential range low at around $15 or something like that, right? It's a possibility, but you're in the middle. So usually in the midpoints of these ranges are usually a bad idea to do anything, right? Especially on a highly speculative stock like this. So I would just leave it alone until it can give you a clear support level, followed by a reversal if you're interested in taking this thing for a short-term swing trade. All right, these things, again, could be tricky because they're very sensitive to news. So thanks for asking about that one. Okay, cool. So any other questions? Any other questions about any stock you'd like to see? We didn't have trade of the week this week. I wasn't going to call a trade. I was actually not going to call any stocks this week because, again, like I said, I don't like what the stock market is doing. So we could take a look around at some stocks. Someone had mentioned in my stream on Monday, DocuSign. Look at this. Someone had mentioned this way before it was doing that. And I think they talked about it here. It was right here on this candle. And I talked about it as a potential breakout. Look at that. And if you got the market going along with it, which we got, right? S&P went along with that. You got the breakout. Wow, what a trade. How much was that worth? If you took the breakout at, let's see, 298.35, this thing's at 307. So about 10 points now. But the thing is, the risk on this was 30 points. So it looks good now after the fact, but you don't think about the risk, right? You're looking at this up here, oh yeah, that's great, it's strong. Should I buy it? The risk was here. So this was up 30 points of risk, and you're up about 10 now. Okay, you need to make another 20 to justify that. Now, so the lesson here is not, oh, I missed the breakout. That's not what I'm trying to point out here. What I'm trying to point out is, what if you're in this? What do? Well, at this point, there's nothing to do because it's not a red candle yet. Can't call this a pin bar yet, right? It's not bearish yet. So maybe it turns bearish tomorrow or something, but until it does, don't get in its way. If you're in from a good price, hey, you have your stop. Maybe you can raise your stop a bit to reduce your risk. Maybe instead of 30 points, maybe you cut that in half to 15 points. Just because the thing's going your way a bit, why not? Nothing wrong with reducing risk. It may get stopped out, but at least it's not full for the full 30 points, right? That's one consideration. But again, the key for something like this is you let it do its job until it gives you a reason, right? And that reason may be a big red candle tomorrow or something like that. Or otherwise, it may just keep going a little bit more and help you justify your risk. That's what you have to consider with these things. Not chasing this thing now. People look on their Robinhood account. Oh, look at this one. It's up today. I'm going to just buy some because whatever. They have no regard for risk, and that's why so many retail traders. You always hear those statistics. That most of them don't make money and this and that, and it's true. And the reason for that, one of the reasons for that, is there's zero regard for risk. Risk has to be constantly measured, and no matter whether you're investing, whether you're swing trading or whether you're day trading, that should be the number one priority always, is the risk. How much risk am I taking? Am I comfortable taking that? And if I lose, how is that going to affect things? Not only that, because one trade, you may lose on one trade. What if you lose 3 trades in a row or 5 trades in a row? This is more important for day trading. What if you have that many losses? I mean, that's so your little risk now turns into a bigger and bigger risk because you keep taking losses. So you also have to have, that's why rules are so important, to help you have some sort of self-control, because if your emotions get out of whack, you can lose a lot of money just trying to make your money back, okay? But that, again, that's more for like people that are trying to do this intraday. So let me see what else we have here. Kim, hey Kim. Okay, I see the red line at 31. Okay, I'm not sure what you're referring to there. I guess you were talking about SPCE. Bart, it's a look at 3105 on my trading view. I guess it's an issue with, so maybe there's something wrong with mine. Oh, look, it's closed here too. Maybe I need to refresh this. Hold on, I'm going to try refreshing. Hold on a second. Maybe I'm not getting data? What's this here? Market open. I'm getting this here. Oh, I'm not sure what that is. What does this mean? NASDAQ by real-time data. Oh, it's just telling me that my data is not real-time. All right, whatever that means. Okay. All right, let's see what else we got here. So if you haven't done, okay, let's take a look at Cardano. Sure, Isaac. Let's take a look. ADA USDT. Hey, Anna. Hey, good to see you. Good afternoon. Thanks for joining. So now, Cardano, obviously a Bitcoin follower, same situation as Bitcoin. Same exact situation. The double bottom area. I've told people before, because people have asked about this one, that 105, right? 105, this is the low here is 102. Basically, like the $1 area is a support level. And that's the place really, if you're going to take something like this, that's the place to be looking. Now, you have the bullish engulfing, basically. It's not exactly fits the definition of bullish engulfing, but it's the same idea. You have it, just like Bitcoin. So, if you're looking to get involved in Cardano, this is the same situation as X was asking before about Bitcoin. Is it still worthwhile to get into Bitcoin? And I went over that whole risk-reward situation. It's the same idea here, right? Your risk is going to be defined by that low, and your reward needs to be at least 1-to-1 or 1.5-to-1, which is still within reason. You can still get that out of this thing in this area here if it could get back to the middle of the range. So you have to decide if you're willing to give it that chance and take that bet. Otherwise, the more conservative thing to do is to wait for a potential higher low, right, which you may get a slightly better price. That's why I was also explaining earlier, placing the limit order below the market to see if this candle or the next candle tests slightly below. And the reason why I even bring that up here is because these markets are not trending. There's no momentum going on right now. So there's a chance that this thing may fool around a bit and tap you in at a better price. So you can consider something like that. Just keep in mind though, if there's a lack of momentum and all these buyers who just bought into this thing, they're no longer comfortable, or Bitcoin fakes everyone out, this thing will break that support, right? That's what you're dealing with here. So keep that in mind. All right, let me see what else I got here. So thanks for asking about that. While QE is running normal, supports don't matter anymore. QE, are you talking about quantitative easing? That's if that's what you're referring to. I mean, yeah, stimulus. I don't disagree with you on that. We're in a stimulus market. We've been basically, people that have been shorting this, we've had a few short positions, and it's been a battle because we're fighting a stimulus market, right? And stimulus, it's basically, I like to think of it as it's an artificially stimulated market. And that's fine. Look, you can't get in this thing's way, right? You can't fight a stimulus market. It's still a market. But when that party runs out, that's what you have to watch out for, right? So everyone's throwing a party. Oh yeah, NASDAQ's going up forever, blah, 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 right? Stimulus market. When this party runs out, it will be dramatic and it will be fast. So that's where, you know, people, when they're all complacent and they got all these positions because they think the stock market is the right place to put their money and blah, blah, blah. Meanwhile, you're buying all-time highs and this thing can pull back 15 or 20% or whatever. You know, they don't realize what kind of risk they're taking. Next thing you know, your account, you know, your $10,000 account or $20,000 account is now worth $8,000 and trying to figure out why. So that's the thing. Like I said, that's just an opinion. I could sit here and talk about that all day long and say, oh, I'm bearish and blah, blah, blah. But it doesn't matter, right? The market's going to do what it wants to do. So I'm not willing to take those chances at these levels. Like I always say, I don't buy highs. And these are definitely not lows where we are right now in these things. So I think that's what she's referring to. Okay. Yeah. So that's the way it is. But like I said, when that party runs out, and at some point it'll run out, at least temporarily, we're going to see some drama, okay? A lot of drama. And the first thing that people are going to ask, I can tell you right now, the first thing people are going to ask in the chat room, right, when we see that first big red candle, is now the time to buy? I'm like, man, it's just the beginning, man. It's just the beginning of the pullback. So that's why you have to be very careful and have a set of rules. Otherwise, the common mistake, and this will be the common mistake, this occurs over and over again. People will jump in too early. They'll jump in too early because they're going to be expecting this again. Because, the market always comes back. It always comes back. We have stimulus to keep it coming back. This right here. Okay? It always comes back. So just buy it. The experts on TV, just buy the pullback. Just go on Twitter, they say buy the pullback. Just buy it. Right? But there's going to be the one time where it doesn't recover like that, right? And then you're going to have a lot of people that get stuck. And when they get stuck, that's what's going to keep the market going lower and lower, because they're going to get caught in these positions. Kind of like the altcoin party, right? All those altcoins that were pushing ridiculous highs, now these things can't get out of their own way. Kind of like that. So just keep an eye out for it. Again, we don't know when that's going to happen, but it usually begins with some sort of catalyst. A lot of times, the catalyst won't be an unknown thing. It'll be something that was in the background and known all along. It just, out of nowhere, people start paying attention to it. Be like, oh yeah, I knew about that housing situation before. Why are they making a big deal out of it now? Because whatever, they're just making it that. That's usually the case. There's some kind of catalyst that's present and no one's paying attention to it. We saw that, I remember that in 2007, 2008, when they kept warning about the housing bubble, blah, 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 and everyone just ignored it. Yeah, housing bubble, nonsense, nonsense, nonsense. And then one day, banks started going out of business, right? So that's usually how it goes. Anyway, okay, any tips on Microsoft? Believe they realize their earnings next week. Okay, I don't like to play earnings for one, and I don't. So here's Microsoft. That's a good question. Look at this thing. Gapped higher today. So Microsoft, obviously a leader in their industry, but do you really want to buy this thing at its all-time highs? I mean, look at this thing. This is ridiculous, right? Like, do you want to buy this there after a gap going into earnings? Here's the problem with that. Because you'll say, oh, but the earnings will be good. Right, but that's priced in, which means if the earnings are, we've seen some stocks like Goldman Sachs, and there were a couple other ones. They've had stellar earnings, very good earnings, and the stock sold off, right? We've seen a few of those instances recently. So what does that tell us? That it's priced in, okay? So that means Microsoft needs to have like 100 times whatever it is that people are expecting for this thing to continue higher after earnings. So this is buy the rumor, sell the news. I wouldn't go near these market stocks. Microsoft is a market leader. It's a market stock. So this is probably what's bringing the S&P higher and the NASDAQ and all that stuff. Stay away from these things at these levels because the risk is just as bad as the NASDAQ and the S&P. All right, so earnings mean very little. If you're a long-term investor, it's a different story, but I'm not talking from a long-term perspective. Even as a long-term investor, should you be buying Microsoft at these levels? Or should you be waiting for better prices? Do you think Microsoft is never going to pull back again? If it pulls back, how low can it go? Well, I mean, the first level is 261. This thing's at 285 right now. So it may take a few weeks or longer for such a pullback, but it can happen. I'd be much more comfortable in something like Microsoft at an old resistance, new support level than at ridiculous all-time highs that are prompted by a stimulus market. Okay, so just my 2 cents on that one. Thank you for asking about Microsoft. All right, let's see what else. Do you have an opinion on Renko charts on HFT? Okay, so that's interesting. I've looked at Renko charts. It's a type of chart, sort of like they're sort of like range bars, but they for high frequency trading, you know, I find them to be, you know, they look good after the fact like anything else. So I really couldn't. I've experimented with them. I have not found anything of value for using those, but they're similar to range bars. If you have like a range bar chart, the candle doesn't paint until the price moves a particular range. In a very small time frame, it could be a mess because, you know, it's very hard to catch those things. They close and it could get really messy. The advantage to using something like Renko charts really is when a market goes into a tight range and it doesn't go beyond a certain range, whatever, it doesn't paint the new bar, right? Same with a range bar. So it kind of supposed to keep you out of stuff, but I don't know. Like I said, I don't really have much of a, high time frames. I thought you meant higher frequency. I mean, I don't have an opinion. Like, what's my question is, what's the point, of a Renko bar? If you range bars are usually good for smaller time frames, right? Because you're waiting for certain ranges to occur before doing anything, and that's supposed to imply momentum or possibly volume. But yeah, I don't really have much of an opinion on them, and I don't use them. So that's really all I can say. I mean, hey, if you want to read more about them or something, I'm sure there's lots of information on the internet, but you could get the same value really out of levels and trend candles. If just think of it this way, Renko bars are available on most platforms, right? I mean, TradingView has them on here. If there was any real true value to them, they wouldn't be on here, because if there was some advantage that they offered, then that advantage would vanish quickly, because the whole world would be trying to take advantage of it. That's the way it works with these things. All right, so thanks for asking about that. Pow, okay. Please take a look at silver. Okay, SLV. Now, silver has been acting a little strange, right? Silver was acting relatively weak to gold recently. So like I was saying before, you can't let opinions or logic get in the way. So let's look at this thing from a technical perspective. Now here's SLV. Now the chart is sporadic because it's the ETF. So let's just take a quick look at XAG USD. This is the CFD, which it's just an easier on the eye chart. And as you can see, there you have this lower high situation. I have it pointed out here, and it's trying to reverse off of that. But the thing is, it's been acting relatively weak to gold, and that's a concern. We had a swing trade on AG, which is a silver stock, got stopped out because of this weakness in silver. Now, in this situation, I wouldn't go after this here. What I would do is I would wait for more structure, let this thing prove that it doesn't want to make lower lows, and the way to do that is wait for a double bottom at this point, okay, which may take a few days or longer. Right, wait for a double bottom or at least a higher low. Now it may go higher first. It may go just a little higher and then give you that formation. But I would rather wait for that formation before doing anything with silver, because what silver really needs to do is it needs to take out this high, which is what, 26 and a half. Needs to take that out to change the structure here. So overall, I mean, if we get the inflation scenario, it should be a bullish thing for silver, but this structure is not what silver should be doing. So you can argue and say it's manipulated and all this other stuff and this and that, but obviously there's some kind of weakness in there, and until the market proves otherwise, I'm staying away from it. If I'm going to do anything with the metals, it will be gold, because gold, at least the chart is clearer, and it's the leader anyway. So thanks for asking about silver. And this, by the way, will affect the stocks too. So AG, if you're interested in the silver stock, AG is still the one to look at. You just need look at AG, right? That was the trade got stopped out at 14. This thing went to, what's the low? It's 12.95. This thing was as low as what? What's the low on this thing? Hold on. 12.35. So, and people were asking when it was breaking 14, should we hold? And I said, I was very clear, no. This thing has no business breaking 14, no business breaking that support level. But again, that's weak silver. So when silver recovers, this thing will probably be a good choice again for a swing trade. But I want to see that structure in silver first. Okay, so thanks for asking about that. Okay, no problem. Let me see here. I'm realizing swing trading, like trapping a beaver, you need to know where to set your traps based on knowing the habits of the beaver. And well, that's a good analogy. I've never trapped a beaver before, but yeah, it's like, you can it could be like an analogy to like fishing. You find a spot where there's a lot of fish, and then you throw your line in, and then you wait because there's a good chance a fish will bite there. That kind of. And there's many analogies, but a lot of times, yeah, trading is more of waiting for the market to come to you, not reacting and going after the market. People, we're automatically wired, okay? It's just human nature to think that we have to take action. We have to assert ourselves. Something is going on and we need to react, because that's how things work in the physical world, right? You want something to get done, you have to get up and do it, right? That's how things just don't do themselves for you. So, but the market's different. The market is an abstract world. It's not real. And number two, we can't see the actual forces that form the price. We can't see. Like I said before, we like to fool ourselves, and we like to come up with all these things that, let people know that, yeah, we can see. We cannot see what goes on inside the candles. Exchanges and brokers and people on the inside, they have that information. They can see the accounts, they can see how much money's in the accounts, they can see the orders, where they're placed, where the stop orders are, where the limit orders are, how many market orders have been placed from particular accounts. Now, why particular accounts? Why not just any random account? Because some little retail trader with a couple of $1,000s in his account most likely doesn't know what he's doing. Most likely he's reacting to information that he's reading from Twitter or whatever. So that's not going to be a very accurate account to follow. But if you have a whale, a large player with a lot of money in his account, and he probably has better access to inside information, especially in the Bitcoin space, his decisions are probably going to be better, right? So you'd want to know where those orders are. You want to know, where are those limit orders? Where are those stop orders? How much does he have a position? How big is the position? Is he putting on more? Is he exiting a position? Right? That's the true information, because now when you see a group of those type of accounts, right? Forget just one. Now, if you have 10 or 20 or 30 large accounts, they could be institutional, it could be a hedge fund, whatever it is. That's quality information. Those are the forces that move the price. Okay? You're not going to see that from a candle. You're not going to see that from time and sales. You're not going to see that from your Coinbase Pro platform showing you the order book, with the order book on Coinbase Pro. It's all meaningless, random noise information that I think is there to stimulate you to react. And it's good for them because they make their fees. All brokers, right? They put all this information in front of you. Why? Is it you think, oh, they're going to help me make money? No, they want you to trade so that they make money. Right? You ever see the Binance platform? It's ridiculous. That platform looks like a slot machine with all the bells and whistles and this and that and that and this and this and that and that. You would think that all this crazy stuff is going on. Meanwhile, 99% of that information is useless. So why is it there? Because they want you to trade. More trades, better for them, not for you. So you have to think outside of the reactive herd mentality type of trader. Again, it's human nature to think that way. So you have to think against your human nature. It takes time to do that. It's not something you can just flip a switch and be like, okay, I'm a contrarian now. It takes some time, because you have to understand, for one, and again, I always emphasize this, you have to understand that what you see on a chart, and I write about this, I make videos about it, what you see on a chart is not what you get. So people will see this, right? The other day, before the green candle, people saw this, right? People saw that. So they react to this, right? All the experts on TradingView and everywhere else. Oh, Bitcoin's going to 0. Bitcoin's going to 20. Oh, Bitcoin's going to break. Bitcoin's weak. Blah, 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 blah. Right. They're reacting to what they see. What was I saying? Bad place to short, good place to look for longs. We don't have one yet, but it's a good place to look, okay? And that's what we get. Do I know that this candle is coming? No. But I do know that the probability of that candle is greater at such a location, right? That's it. So what is that probability based on? The fact that there's been plenty of evidence that there's been a lot of buying activity in this area going back all the way back to May. It's there on the chart. All those tails, all those pin bars, right? Someone's stepping in there over and over again. Someone's stepping in there. You can't ignore that. So, but these people watching their 5-minute charts, these 5-minute experts, they're completely blind to what's going on here, or having any idea how this works. So anyway, that's my really long answer and rant on that. Okay, let me see what else we have here. Isaac, any thoughts on momentum structural analysis? Claims to be the most forward-looking momentum structural analysis? I'm not familiar with that. Momentum structural analysis. I'll have to Google that or whatever. I'm not familiar with it. But sometimes you get these gurus, or someone will point out like a particular oscillator or something, and then they'll make a big deal out of it, and they'll come up with some statistic. I've seen this over and over again, and it becomes like the flavor of the week type of thing. Like a few months ago, when Bitcoin was near its peak, they were talking about the PI oscillator, right? Guys were coming up, what do you think of the PI oscillator? And I'm like, where are they coming up with this PI oscillator? Some big mouth must be talking about it somewhere. And I looked at some videos, and there you were. You had a few big mouths, and they're, oh, look at the PI oscillator here. It's predicted Bitcoin turns like every time, blah, 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 blah. Right? So don't go by that stuff. I mean, I'm not familiar with that, but there's each type of tool that you use has some amount of value, right? And usually the point of these things, like an oscillator, is to smooth price. That's what it's meant to do, smooth price, meaning it's trying to make it less noisy for you to make a decision, because price can be very noisy, especially on smaller time frames. So if there's like some kind of oscillator involved, or some kind of moving averages involved, or whatever, then there's nothing forward looking about it. The only thing that's forward looking is a trend line, support and resistance lines, right? Those are forward looking. Possibly Elliott wave, because you're anticipating the next wave. But if there's any type of oscillator involved, or any type of mathematical equation that's processing price in some way, it's not forward looking. So just keep that in mind. This game is about understanding where your potential is in light of the trend. Trend is the only thing that a retail trader, right? It's really the only thing that we have on our side. It's the only thing the only information that we can get that can kind of give us a chance is trend. Everything else, we can't compete on any other front. In this game, we cannot. We don't have the advantages of the smart money and the institutions to compete on any other front. So anyone that's trying to do anything else is just wasting their time. Okay, I found this out the hard way. But there is really no other advantage. We don't have speed. We don't have deep pockets. We don't have all these. We don't have political connections. We don't have inside information. We don't have all these things that are used to get an advantage in the market. So we have to rely on trend. That's all we got. All right. Anyway, can you chart GBTC? Sure, no problem. The scammer. I'll take a look at that, and then I'll wrap this up here in a couple of minutes. Good questions, by the way, everyone. GBTC. Now, I'm expecting this one to look similar to Bitcoin. Yeah, I mean, kind of, look, it looks like a sporadic Bitcoin, right? Looks just like Bitcoin. But, of course, it's grayscale. Sure, it should look like Bitcoin. So it's the same deal, right? It's the same deal as Bitcoin. Use Bitcoin as your chart, and you probably get a better heads up on this thing. So you're looking at this low. What is this low here? $24. That's going to coincide with what? 28.5? 28,500 on Bitcoin, and you bounced off of it. So, I mean, if you're buying this thing now, what's the price? 26.90? That's where your risk is defined. It might be a better way to buy into something like Bitcoin. If you don't want to buy Bitcoin, you can buy shares. Are these still at a premium to Bitcoin? I know there's like that premium discount thing with this. I know at one point they were selling this thing at a discount to where Bitcoin was. Anyway, but using the chart, yeah, you're trading Bitcoin here. It's just a stock. It's like an ETF version. Think of it that way. So your risk reward is going to be the same situation. Look at this consolidation on GBTC. It's the same idea, right? This coincides with 41K. 34.25 coincides with 41K on Bitcoin right there. So either this thing takes out those resistances, right, which Bitcoin has to do, or this thing fails somewhere in the middle here, and you're back to the support. So one thing you have to keep in mind in this situation, just to give you some perspective, as long as 41K holds and 38K holds on Bitcoin, those are lower highs, and they have yet to be taken out. We have a double or triple bottom, so there's a chance that they get taken out. But until they're taken out, the recent structure, this structure right here, going all the way back to the peak, that structure it favors a bearish break. So we don't have the bearish break either, right? That's where the conflict is. That's why you have all these guys with the big mouths calling for bearish, blah, 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 but we don't have it. So, which can be argued as a sign of strength, but the strength isn't fully proven either. So it's conflicted. So what do? Well, for us, it's easy. We don't short. So we're only looking at one side. And any bullish thing that shows up, hey, we're open to taking it because we only play one side. And if it happens to break those resistances, hey, great. We're only looking for the bull side anyway. But if you play the short side, then you're looking for resistances, not supports, and you're not looking to short here. So I know most people like to buy it anyway, which is fine. But you always get those questions about shorting, and that's where you want to look at those resistance levels. All right. People are going to make predictions, and they're going to say, oh, it's going to do this, it's going to do that. You can't make predictions. We don't know until price provides some evidence. And the evidence here, again, would be the break of this resistance. It needs to be cleared. And once it clears, we then have evidence. Now, some people say, oh, by that time, the price is going to be so much higher. Why would I buy it then? Well, no, you can take the risk now and then hope for the best. Right? You take the risk now, and if it goes that route, hey, you're in from a low price, and now you have the luxury of being a strong hand. That's the reward you get for taking the risk now, and where things are not so certain. You can't wait until things look great, because that's usually the time to get out. Okay? This could be the beginning of a new move, and it may fail again. You have to be. It's not about the move or about the prediction. It's about, are you willing to take the risk? Okay? That's the question that you always have to ask yourself. That's what this game is all about. Are you willing to take the risk? If you're unsure, or you're like, I don't know, then you're not willing to take the risk. Because someone that's willing to take the risk, well, yeah, I'm long, no problem. I'm long, 2 seconds, I'm in, here's my stop, blah, blah, blah. Like, you have no problem, right? You're all for it. You don't think twice about it because you're willing to take the risk. If you're unsure, then you're not willing to. Or maybe you should make your size smaller so that the risk is more tolerable. But that's really the key question that only you can answer. Are you willing to take the risk? And you have to go from there. If the market rewards you for taking that risk, great. If the market, you have to pay the market, hey, it was a risk that you were willing to take. So I repeat that a lot. I say risk a lot, but that should be the center, that should be the focus of all of your decision making. Not how much money can I make? Is this the right time to buy? Theoretically, all the time is the right time to buy, theoretically. Okay? It's just there are times when risk is much higher than other times. Buying a high, the risk is very high. So I don't like to buy highs. If I'm going to buy something strong, I'd rather buy nearer a low because the risk is much more attractive. I could take a much smaller risk, and my chances of making a greater reward relative to my risk are much higher. That's it. That's what you have to do. Okay, Bart, would you consider selling BT from your position if you own BTC shorting? I'm not sure of the question. Would you consider selling BT from your position if you own BTC shorting? I'm not sure what you mean, but we don't short Bitcoin, so I don't even think about it. If I was going to short Bitcoin, if I was going to do something like that, it would be as a day trade, no other time frame. Okay, I'm not interested in swing trades, especially at these levels. Ridiculous. The risk is ridiculously high. Okay, so no shorts. And I don't day trade Bitcoin, so no shorts. Would I consider selling Bitcoin for what? I mean, the Bitcoin that I have, why would I sell at a bottom? We're near a low. And this low, if you look at the bigger picture, that's a higher low relative to, look at that chart, right? That's the broader trend on Bitcoin. That's bullish. Why would I sell a low? I'd be interested in partialing out near highs, right? Like we were doing back when this thing was fooling around in the 60,000s and 50,000s. We were taking partial profits on inventory. That's where I'm open to being, to sell, not at a low, especially at a major support area. Okay, so I hope that answers your question. All right, so cool. Everyone, I'm going to wrap this up now. I got everyone's questions. Usually Thursday is a little slower because I'm not simulcasting on TradingView. All right, and I'm happy to answer everyone's questions and really give you some really long answers. I mean, I spent like 10 minutes answering questions here, each question because I talk too much. Anyway, my question is selling Bitcoin is shorting. No, selling. Okay, cool. Yeah. So when I refer to selling, I mean selling along or selling to close. All right. So for those that may not understand. All right, cool. So that's it. I'm going to wrap this up. Hey, thank you everyone for spending a little time with me here today on Thursday afternoon here in the U.S. I know we have some people from all over the world here, so I know it's like midnight in some of these places, and again, I really appreciate that. I hope you get something out of this because that's the whole idea, to give you some perspective, of what's realistic over the next few days. So again, if you want to know a little bit more about Greenbridge and stuff, there's the links in the descriptive portion. If you just click on the show more thing below the video. This environment can be slow at times, so I just want people to understand. You know, they may do the free trial and they may come to the room and not see a lot of action, but we don't push action. In fact, I spend a lot more time telling people to stay out of trades, because more times than not, that's the right thing to do. So people learn how to be defensive and how to protect their capital more than anything else, not taking thousands of trades. These people that push action, they're only pushing that because they know that's what you want to hear, and they just want to, you know, take your money and the subscription, whatever, blah, 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 and that's the typical thing to do. We don't do that because, you know, I don't like to mislead people, or at least, you know, if I know what I'm doing and this is the way I trade, this is what I'm trying to show people. I'm not going to just put a bunch of random trades out there and hope for the best, which is what a lot of these guys do. So my point is, if you come to the chat room, you have to understand what you're getting into. This is not like an action thing. You know, you're not going to sit here and you're going to get thousands of trades. Sometimes a couple of weeks may go by and we don't have like a new swing trade on Bitcoin or something like that. Because again, we don't force the trades. All right, so I just want to make sure that that's clear. But you'll learn a lot. You'll learn a lot about perspective, kind of like the streams here. You know, I share a lot of perspective in the room. Andrew puts a lot of stuff in the room, perspective-wise, and you get stuff like that. You know, of course, with the signals when something comes along. Anyway, okay, cool. I appreciate that, everyone. Thank you for the kind words. And again, thank you for joining me, and thanks for watching.